So let's look at all my buys so far because the comment section seems to always know exactly how my buys go. So let's put it to the test and see if I'm a disaster and my portfolio is in the toilet or if we're actually doing better than expected. Let's have a little bit of fun today and see exactly how things are going so far. And I'm going to give you guys the good and the bad because anybody out there saying that they just have all winners all the time or anything else like that, it's just, they're not being very honest, guys. Even Buffett has losers, so I'm going to include everything right here for you. Just make sure you like the video if you like getting the truth without the hype, because that's exactly how you help us out in the end. Just giving the video a nice little like does everything for all the creators. Do it for all the creators that you enjoy, because that's absolutely how you help them out the biggest. All right, so I'm just going through the buy alerts for my big portfolios here, from our full members right there through my main portfolios that I have. I actually got 5 of them out there that I have. So when I make a buy in one of those 5s, that's when I post a buy alert to my group. So that's exactly what I'm doing. This is not the $250 portfolio challenge. That's a different challenge with a different reasoning. Obviously a completely different strategy because I'm pretending like I'm starting from scratch. So obviously you're going to do things a little bit differently if you're starting off from scratch, as opposed to a more seasoned investor like I am with all the rest of my portfolios there that have different goals, different strategies, and everything else involved with them. But we're going to go through all the buys there and see exactly how we're doing. So first up is Meta. Average of those buys was $463, and currently we are sitting at $518 as of the time of recording this video. So basically a nice, 11% gain or so, because Wall Street is just dumb. This is one of my favorite situations that happen is we go through it, we listen to the earnings call. It's great earnings, great guidance, or, to me, it sounds like great guidance, but Wall Street goes, oh, it's a little bit less than expectations, and they just crap all over a great stock. Those are buying opportunities. That's why I don't listen to reaction videos, why I don't pay attention to what CNBC says or Kramer or anybody else like that. Those are gifts from Wall Street, and when you do your due diligence, when you have price targets already set for a stock, when you understand exactly what you own, and more importantly, you understand exactly where fair value is, it makes it very easy to identify opportunities like this where, hey, that was an easy 11% move on a stock, on a great stock that everybody knows. It's not like people are, this isn't 2022 where, there was giant fear around Meta. It's not. Everybody knows this company's performing awesomely. So for me, this was a great opportunity. I added to it, no problem. And again, it's already paying off so far. So stock number 2 is Google. Average buys in Google were sitting at $147, and currently it's sitting at $187 per share. That is a 27% gain in Google. And I'll tell you what, this is kind of a discussion we were having in the group the other day. No stock, it seems, at least for the past year or two, has given you more gifts on more stupid narratives than Google has. We're sitting on a 20+% gain because, their little chat GPT type thing, Gemini, basically spit out a bad image there, and there was all this negative press, and of course it went down all the different rabbit holes that people like to go down to nowadays. Awesome. I went, wow, looking at the earnings, great everything else. I'm not expecting anything from Gemini because all those products are not anywhere near where they need to be for ready for prime time or anything else like that, much less anything else. No fundamental change to the business here. You're giving me a great discount. We're going to buy it up. And that's exactly what we did. This was very easy money. I don't know why. I don't know what the methodology is behind it or anything else, but there you've had repeated times over the past couple of years where just Google has gotten beaten down for just the dumbest reasons, to include 2022 when it went all the way down to $80 because somehow ChatGPT was going to kill it off. You don't know these sort of things. In the end, being prepared, it makes it very easy for you to jump on deals like this. And we are up big time on these deals. So stock number 3 is Tesla. The average of my buys on Tesla this year are sitting at $155. And right now the stock price is at $197, hovering right around that $200 mark. Another 27% gain in a stock in under a year with a great stock like Tesla. It's not like we all don't know about Tesla. And this is what we talk about when I talk about not playing games with Tesla. There's more noise around Tesla than any other stock in the stock market. And yet we're sitting on a 27% gain, not because we traded in and out, not because we did this call option play here and we shorted here, but then we bought back in here and all this other ridiculousness that people make. All I did was have a plan, have a price target, buy at the price target. If Wall Street gets dumb and beats it down there, just execute your plan. That's it. Simply DCA when it hits those price targets, or execute a modified DCA. In my particular scenario, where I execute my buys and start the DCA at those price targets. This again was very easy money, despite all the noise and everything else that was around Tesla around these times where people were selling and shorting and then going long and I don't know, just all the other ridiculous things that were going on there. This was easy money in the end. I did not have to play a single game. I just had to stay disciplined. That's it. And so far, it is perfectly illustrated why just being disciplined and ignoring everything else allows you to really make a lot of money in the stock market, sometimes in the short term, but over the long run, this is how you build out massive portfolios. And remember, if you want to see all of my buy and sell alerts in real time, see my complete watch list with price targets, learn exactly how to do price targets and how to do valuations on a stock so you know where fair value is so you can set appropriate price targets, and you want access to the best 6, 7, and 8-figure Discord out there, and you want access to that free coaching you can take advantage of, see that $250 portfolio challenge if you're looking, maybe my situation isn't exactly right for you, but you want to see, hey, what would Luke do in that particular situation? Oh, and by the way, you also get our super investors as well. You can see their buy and sell alerts in that $250 portfolio challenge. And of course, all of our members buy and sell alerts and everything else going on. Make sure you check out the pinned comment down there because one of the biggest discounts ever for my group is on right now for full membership. So make sure you check out the pinned comment and see if a membership's right for you. I mean, hey, if you just bought a reasonable chunk of shares in each one of those stocks, it's already paid for the membership for years into the future. All right, so on to the next stock, and that would be PayPal. And the average buys this year comes out to $61 per share. And right now it's sitting at $58 per share, right around $58 per share. So we're down about 5% on those buys. You guys knew PayPal had to be on here because you guys know that I continue to buy PayPal. It's one of the most frustrating stocks that I own. I would agree completely there. But as you can see, as that price continues to come down, we've kind of stabilized right in that range there. I didn't time the bottom. I didn't get any shares at $50 or anything like that in order to get that lower average. I didn't do any of that sort of stuff, but I am down on those buys. And again, if I was trading, I'd be in trouble right now. That clearly was a poor trade, but I'm not trading. I'm just accumulating shares because I understand share count is what's going to matter in the end. Now, of course, if you don't believe in PayPal, you don't think they're going anywhere, you don't believe in Alex Chris and his vision and his goal and the things that he's doing right now, okay, it makes perfect sense to, maybe cut your losses and get out of that particular position, but make sure you know where you're going in that different position there, because otherwise just saying, oh yeah, I'm going to get out of that one, but then I'm going to go to NVIDIA because NVIDIA's up X amount, but you don't actually know anything about NVIDIA. You don't know anything about their valuation or anything else like that. It generally doesn't work out well over the long run. Not saying NVIDIA is a bad stock by any stretch of the imagination. I understand it's a great stock, but make sure you got a plan if that's what you're going to do. But for me, share count's what matters. And so, yes, I've been adding more shares to PayPal, despite the fact that I am down on those buys. So next up, we have Palantir, average of $21.50, and we are sitting at almost $25 per share. So another nice gain of 18% on a great stock here. And we've been buying this stock, man, it seems like forever there. Well, I'm all the way down to the sixes, all the way up to here now. And again, this is where share count matters in the end. You want to give me a little bit of a discount on Palantir with a great company that's executing. I'm just going to continue to accumulate shares. Obviously, does that raise my average? Absolutely, but I'd much rather have a higher average and a lot more shares than a lower average and not less shares. Now, that doesn't mean I'm going all in if it gets overvalued or anything else like that. But every time I get a nice discount on Palantir, I'm going to add to that stock right there. And as you can tell, just staying a little bit disciplined like that allows you to make some pretty good money and have some pretty nice gains in the short term there on your portfolio. But I'm not here Palantir for short-term gains. I'm here for the long-term gains. And I think we're going to make a lot more money on Palantir in the future. Next up is SOFI. And my average is $7.43 on the buys this year on SOFI. And currently we're sitting at approximately $6.50. So I'm down 12% so far on these buys. Like we said at the beginning, not everyone's going to be a winner. I got a couple of losers here. Again, I think I have 3 total out of the 9 that we're going to talk about here. So not too bad. But I believe in SOFI long term. I believe this is it's not the most mismatched price in the stock market, but it absolutely is kind of in that disrespectful part of Wall Street. Wall Street's not sure what to do with it, not sure how to price it. Obviously, the traders are controlling it completely right now, but we're seeing a lot of positive signs to include institutional ownership increasing significantly in SOFI stock at these depressed prices. And obviously, there's not like this company isn't executing on a very high level. They absolutely are. And this happens sometimes. The fundamentals get decoupled from the stock price. So I am perfectly okay being down on the short term on this particular stock. My average is actually really low because I added so much in the 4s and the 5s when we got that. Obviously, this is averaging up regardless. My total average is significantly below where it is right now. So I'm really green in this position. But for this year, which is what we're including for this particular video, understand completely, I'm down pretty significantly as well in terms of percentage on these. I mean, in the end, of course, I'd much rather these buys be averaging 650, but whether these buys average 650 or 750 or 850, if SOFI goes to $25 in the future, at that stage, I'm not really that concerned as to whether or not these buys were at 650 or 750. And that's kind of my mindset with SOFI at these particular prices. But I can't say I'm not down on them either, so got to be honest with you guys and up front. So on to my dividend buys here. I just kind of broke them out because it's a little bit of a different strategy with those. Obviously, I have a different reason for owning them and everything else, but nonetheless, they were buys, so let's take a look at them. So the first one is General Mills, and my average there is $62, and we're currently sitting at $64. Again, it's kind of a boring stock there. I know, it's just up $2. Who cares? It's negligent there. Remember, I own it for the dividend in the end, and I think General Mills is a strong company, a very safe company, very stable company. So that's why I own them right there. Up negligibly. I didn't really buy it for share appreciation anyways. But obviously, if you wanted to build out a position right now, it's not at a horrible valuation either. So for me, it fit my plan, fit my criteria for what I wanted, and that's exactly why I bought the stock. Number 2 is Coca-Cola, and my average is $59, and we're currently sitting at $64 per share. So that's actually a nice 9% gain on a dividend stock. I understand that, dividend stocks typically are boring, but hey, occasionally, Wall Street gets kind of dumb. Dividends plays kind of got out of favor there. So there were several different buys I was able to make in regards to that to get a nice low average. Now, do I care in the end as to whether or not it's up 9% or not? No, I bought it for the dividend years into the future there. So it doesn't really make that big of a difference, but it's nice being up on a dividend play. But, we got to talk about the last stock here we're going to talk about today because that one didn't go as well as the Coke trade did. So last up is Starbucks. And my average buy there was $87, and it's currently sitting at $78. So I'm basically down 10%, so basically that wiped out all of my Coke gains there. So, we're basically kind of break even plus the dividends there on those buys this year in that particular portfolio there. And that's just kind of the way that it goes sometime. Again, I own these for the dividend and for the future. If I get share appreciation, for me, that's just a bonus. That's not why I own these stocks in that dividend portfolio, which is why we talk about goal setting and why that's so important to pick in the right stocks to hit your goals. And remember, one of the biggest discounts ever for my group is live right now, where you get to see all these buy and sell alerts in real time. You get to see my complete watch list with price targets, take 5 courses for free, use our stock analyzer tool for free, get that free coaching, be a part of the best 6, 7, and 8-figure Discord out there. Take part in that $250 portfolio challenge if you're looking for a little bit of a different strategy there, and so much more, guys. Just check out the pinned comment and see if a membership's right for you before that sale expires and the price goes back up. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.